Hey, it's Stuart. Helena has asked a really great question about co investing with siblings or even other family members. It's a great way to sort of pool financial resources, and we've helped lots of clients do that over the last 20 odd years. And in the most part, it's been really successful, but there's a few things to consider before you enter into that arrangement. So, firstly, it's a great way to pool financial resources. That is mostly borrowing capacity and then the ability to service a particular loan amount. So, put differently, it's better to buy one great asset than two average ones. And so, people starting out tend to have limited financial resources and their capacity is stretched. And sometimes that means they've got to make compromises. So, if you can team up with a sibling, brother, sister, whatever it might be, and say we can pull our resources, what it means is that we'll be able to buy a much better quality property. Sure, we only got half of one property, but better to have own half of one amazing property than 100% of a very average one, particularly as buying your first property is one of the most important acquisitions you'll make. Because if you get it right and you enjoy some strong capital growth in the first few years of ownership, you're off to a great start, and that can have compounding benefits. But if you mess it up and you're no better off for making that acquisition, financially, of course, you're a little bit behind the eight ball. The other thing too is investing with someone that can complement your financial position. So, for example, if one sibling is asset poor but income rich, they've got a good deposit, but they just don't have a very high income. And the other sibling is the reverse, a very high income but limited deposit. Again, you can pool your resources and get into the property market. So let's talk about some of the key things that you need to consider before jumping into something like this. Well, firstly, be realistic about each other's financial management. So if you're great at managing money, but your sibling is not, think very carefully then about getting into this arrangement with them. And if you do get into the arrangement with them and you've got to follow them up every month for their share of the loan repayment or something like that, well, at least you knew it was going to be that way or potentially be that way before you got into the arrangement, and you're far less likely to be frustrated. There are some lenders, CBA, for example, if you Google CBA property share, in fact, they've got a policy that allows people, particularly siblings that co-invest together, to have your own loan account and your own offset account, which means that you can own a portion of a property with your sibling, but from a ongoing financial management perspective, both from parking your savings in an offset account, managing your own loan repayments, that's completely separate. Now, of course, you co-own a property together that will be used as security. So if one sibling completely messes it up and fails to make the repayments, the property is on the hook. So you're only limiting your risk a tiny little bit, but it's really just from a practical perspective of being able to manage your money separately and having full control over that. So check that out if that's something, or speak to a good mortgage broker, of course, if that's something that you want to explore. The biggest thing, though, is really to discuss all the things that can go wrong before you jump in this arrangement. So what happens if there's large property expenses? So a hot water service blows up, or there's a leak in the roof or something like that that gives rise to a big bill, a big unexpected bill. How are you going to navigate those sorts of things? What if one party loses their job and can't afford to make the loan repayments for a period of time? What happens if interest rates rise and repayments go up? Of course, with interest rate settings today, that risk is pretty low. But again, just as a general rule, something to really think about. So you've just got to sit down and think about everything that can go wrong, and then work out how you're going to attack that, how you're going to deal with that down the track should it eventuate. And at least you're going in eyes wide open. Now, the biggest factor with co-investing, particularly with siblings, but especially with really anyone else, is that it will never last forever. That's my experience anyway. It's a finite arrangement. At some point, the owners are going to go in different directions and want to use that asset differently. So, for example, 5 years down the track, one sibling might want to sell the property so they can crystallize the equity that they've generated in that property because they're getting married and they want to go and buy a family home, something like that. The other owner might not be in that situation and be keen just to continue to hold the investment property. So I think you've got to go into these arrangements knowing that it's not going to be forever. Hopefully you can get 5 years out of the arrangement, maybe 10, but probably not more than that. And so the biggest thing to discuss and agree is exit strategy. If one person wants to exit the arrangement, how are you going to deal with that? Now, of course, if the other person, the remaining party, can buy the other person out, of course, that's one option. But what happens if they can't afford to buy the other person out? Again, if you go in eyes wide open and if everyone understands, look, if one party wants to walk away, the downside to this arrangement, and it is that we might have to sell the property much sooner than we otherwise might like to. But I think if you go into these arrangements full well knowing that that's the potential outcome, but with the intention to hold it for as long as possible, I think the chances for hiccups or things to go wrong are greatly reduced. So I think it's a great strategy. It can be a great strategy, I should say. But there's a few key things that you really need to discuss and agree upon before you jump into an arrangement like that. But great question, Helena, and thank you for submitting it. And I hope that information and a little bit of experience that I've shared helps you. Cheers.